Welcome to this week's market drama. We'll begin with the markets. The S&P 500 and NASDAQ were down roughly 2.5% for the week. Stocks are now in correction territory, meaning they've fallen 10% from the recent highs. So what's going on there? There's two major drivers. One is the continuous move up in treasury yields, specifically the 10-year treasury yield. And then this prior week, we also had a mixed bag of earnings report, especially in the mega cap technology stocks, which have been the ones driving or propping up the market higher. So those two things really have driven kind of the last leg of the markets. Taking a step closer to look at the data, on the economic side, we had a really strong third quarter GDP number, came in at 4.9% annualized growth, much better than expected. And the biggest driver there being consumers, consumption. It backs into some of the numbers we've seen in prior weeks, for instance, like retail sales, right? So good news, economy is not a recession. Bad news is economy looks to be running above its trend growth, which gives less credence to say, hey, the Fed is probably going to lower interest rates soon. It's like, why? The economy still looks to be running at hot pace. So there's no need to lower interest rates anytime soon. The other data point to showcase also the fact that maybe the Fed could keep interest rates where they are, or maybe even raise interest rates a little bit more, is we also saw core PCE index data come out this prior week, which is the Fed's preferred measure of inflation. It ticked down from 3.8 to 3.7, but is well above the 2% target that the Fed has, right? It's another reminder, if you will, for the markets of, hey, the Fed's not going to lower interest rates anytime soon. If anything, if they see such an economy that's still running hot and inflation is not coming down at the pace that they want to, they might keep interest rates longer than the market currently expects. And maybe that's part of the repricing of the stock market that is occurring. Next week, on Wednesday, we have the Fed decision on interest rates. Market's not expecting them to do anything, but there is a press conference afterwards. So look for commentary there as to where they might go next. And then on the 3rd, we have U.S. non-farm payrolls and unemployment rate data, which once again will give us a sense of how the economy overall is holding up. Stay tuned for that and look forward to chatting with you guys next week.